Hey guys, Mike here. So obviously Jerome Powell spoke today. The markets were all over the place today. And I'm going to let you listen to a 1-minute clip, which is just the highlights of what he actually releases to the press before he ever speaks, as you've seen in the past. And please tell me in the comments what is different about these highlights or what he's saying versus what he said last week. I'd love to know because I can't spot anything. And, we're going to talk about one, yes, the market's going up and it's going up fast. Why is that? There's actually 3 reasons for this, really. 2, why did bonds sell off like crazy today as soon as all that speech was released? And then, yes, is it true that the stock market goes up when the Fed funds rate goes up? Okay, I'm going to answer that for you, but I'm going to go into a lot more detail. And the reason I'm going to do that because I get frustrated when I see people who, especially who are bearish, they were, oh, the bear market's here, the world's ending, and all of a sudden they flipped like on a dime. But then they start cherry picking information to give to you, and I don't like that at all. I don't, if you don't like the information I'm giving you, it's fine. But at least it's data, it's right there, so you can make the decision for yourself. But and you'll see a lot of people say all they're talking about is the Fed funds rate in the stock market. That's all they talk about. That you cannot do that. You have to take everything as a whole, right? You cannot just sit there and say, yes, the Fed funds rate goes up. That's a good thing, which, by the way, is true, by the way. It means we have a strong economy and all that good stuff. In this case, but they're trying to raise it so fast because inflation is so bad, right? And so, I'm going to show you a little different view you can kind of look at and make your own mind up what you think. And I always want to get your opinion, of course, in the comments on that. And so let's get started. If you get anything out of it, hit the like, subscribe button, notifications all. Really appreciate that, guys. And let's get into the 1-minute clip of what were the highlights today and why was the market all over the place when this came out.
Hey, Scott, the Fed Chair, Jay Powell, will say to the NABE conference that the Federal Reserve has an obvious need to move expeditiously. And the Fed can, if needed, move to more restrictive levels on rates if required to restore price stability. To that end, the Fed chair specifically says if it needs to move by more than 25 basis points at an upcoming meeting, quote, we will do so. If the Fed needs to hike rates above neutral to control inflation, it will do so. He also sees a rising risk that the long-term inflation expectations can move higher if the Fed does not get inflation under control. He says the Ukraine war is likely to spill over to the U.S. economy, restraining overseas growth as well as restricting supply chains. He says there's more COVID-related supply chain problems coming from China and the disruptions there related to COVID from China. He sees inflation coming down, though, on the good side here, 2% over the next 3 years. History, he says, does provide some grounds for optimism that there could be a soft landing.
And just FYI, that history he's talking about in the speech was one time in history. I think it was 1994 he referenced, okay? And so that's what he's talking about. You can honestly tell the guy when he was talking about that, he didn't believe a word he was saying. You could just tell he's like, yeah, one time in 1994, we were able to execute a soft landing. It's like, okay, great. I mean, I didn't get you anything he was selling, but to me, those highlights, that's exactly what he said last week. It's just no different, right? And so getting into, the market here, looking at the QQQ, the NASDAQ, since most of us are in the growth stocks and stuff. And so, you just look at the volatility. I mean, as soon as we open up this morning, boom, we end up spiking and then heading straight down. I mean, here at 9:42, the market drops 1.61% in 50 minutes. Then it says, okay, well, at 10:30, let's go ahead and move back up. So it moves up 1.54%. Then the speech ends up getting released around noonish, and boom, sells off 1.81% in an hour and a half. And then, of course, the rest of the time, it actually goes up and down, then comes back up to about 1.25% by the end of the day. And so looking at what happened to the yield curve here, this is the 2-year versus the 10-year. You can see it obviously spiked, and the reason why it spiked was because bonds sold off, yields absolutely skyrocketed, as you can see right here, and the 2-year went up faster than the 10-year. You see the 10-year, which we always talk about, is up to 2.3%. And the reason why is because people got rid of their hedges, right? They're like, well, the stock market's going up. Why do I want to be in bonds and all this other stuff? So they dumped those really quickly. And then going over to oil, what's going on with oil all of a sudden? It was supposed to go down to 50. Nope. Bounces off that support level, and all of a sudden, U.S. oil is back up to around 112. Brent's up to around 116. So, it's heading back up. And this leads me into, this right here, before I get into why the stock market is heading up, is this right here is the Fed funds rate, and I laid over the NASDAQ over top of it, okay? And you can see, yes, when the Fed funds rate is raised, the stock market, including high growth stocks, do go up. But look at how slowly they raise these rates right here. They went from December of 2015 to July 2018 to get to 1.9%. They want to be at 1.9% by the end of this year in 10 months, while at the same time starting to run off the Fed balance sheet. Well, if you look at this chart right here, you can see, look what happens to the NASDAQ or the QQQ when they start trying to run off the balance sheet and raise rates. That's where it starts. Look where it ends. Right there, that's January 1, 2019. 0% gains. You had one 10 to 12% drop, as you can see, one 8% drop, and then a 24% drop, all in 12 months. Look at the volatility. Now, is this not looking a little familiar, what we're going through right now? And of course, when's the big spikes come? When they actually announced no more rate hikes and then decreased the Fed funds rates 3 times in 2019. That's when you get your really big moves up in the market. And so that's what I'm talking about when I say cherry picking. And you can't just talk about the Fed funds rate by itself, because yes, in history, that's going to happen. The stock market goes up when interest rates go up. They raise interest rates when they have a strong economy. Yes, that's a good thing. But in this case, we have way more going on than just a Fed fund rate. And I showed you right there the last time we tried to run a balance sheet off, which is only like, I think their Fed fund, I think the Fed's balance sheet was only like $4.5 trillion then. Now it's $9.5 trillion. And inflation in 2018, you know what it was? Yeah, I think it was below 2%. I'm pretty sure it was. It was in normal, right? And the reason why you know it was normal, because nobody was talking about inflation in 2018. All right, and so, you had none of that going on. You didn't have anything. You didn't have oil. Oil was not over $100 a barrel. Oil hadn't been over $100 a barrel since 2014, guys. And so you got all this stuff going on. We had no supply chain issues. We didn't have China doing more lockdowns right now. We didn't have Russia invading Ukraine. All this mess going on. And so you have to kind of talk about everything as a whole. Now, it's a big guess of what's going to happen. And understand that right now, does that mean, wow, the stock market can't go up? Oh, absolutely not. The stock market is the most irrational thing on the planet, believe it or not. I mean, it really is. I think you saw that in 2020. If you didn't see that in 2020, I don't know where you're at. You had stocks for companies going up that weren't even open, right? Their doors were shut, their employees were at home, and the stocks just kept going up. And so, you generate your earnings or nothing, yet your stocks are going up. And so that shows you how irrational the stock market can be. But the reason why is 3 reasons. 1, the stock market is just irrational. That's one reason it's going up. 2 is because they've already beaten and shortened the stock market down so much, right, that it's time to run it back up and make money on the other side with all the money sitting on the sidelines. Look at this right here. This is how much cash fund managers have sitting on the sidelines. It's a boatload. You can see, look at every time you were up at this level, these when you had these big moves up in the market, because they've just been sitting on the sidelines waiting to deploy it. And so, that's what happened last week, guys. You got all this money sitting on the sidelines. The stock market can be irrational anyway. And you got all these high growth stocks that were just beaten down. I mean, some of them down 90% and stuff. Boom. All of a sudden they're running up. It's like retail investors didn't start moving those stocks up by themselves. That's the institutions coming behind, flooding millions of dollars in there, right? I mean, you saw what happened to Ark, right? That thing was getting like it was a leper or something, right? Leprosy, just being beat down. Nobody want to touch it, and all of a sudden it moves like 10%. Now, who did that? Retail investors? No. There's no way, right? And so that's just the game they play. And so if you say, Mike, would you be shocked if we hit an all-time new high in the next 3 months? Would I be shocked? No. Should we? No. We shouldn't, not with all this stuff. But wouldn't surprise me a bit. Wouldn't surprise me a bit, because they've made a lot of money pushing it down. Again, they're making a lot of money pushing it up, right? And they'll make a lot more money pushing it down again at some point in time. That's the way it is. You just got to buckle up and enjoy the green days, ride the volatile days, and just, not really get up or down on the red days. Just try to have your list, have what stocks you want to buy on those red days and stuff, and you'll be fine in the long run. That's really what it comes down to, right? You just got to kind of look past this year. But again, I'm just not a guy who's going to cherry pick data off there and go, oh, the Fed's fund rate, that means everything goes up. Yeah, but what about the other stuff? The problem is there is no textbook. And that's one thing, if you hadn't seen what he talked about today, one thing he went into a lot of detail about for a couple minutes was, why have their projections been so far off? It's because, he didn't say this, but let's be honest. there was no textbook for this. We've never shut down the world. What he did say was they just really underestimated the supply chain issues and what starting an economy up again was going to look like. They didn't have any clue that the workforce was going to come back as strong as it did. And so the one thing I'm trying to figure out, maybe you can help me out. I got to start asking around about this. Sometimes you can just go in a store and ask. But I'm starting to hear, in restaurants or, talking to friends that, man, you used to be able to get into any place, no problem. Go get a massage, go get your nails done, go whatever, this, that, and the other. And all of a sudden, you're having to wait a long time for certain services you used to be able to get into. I'm talking about within 3 months ago. You're able to get in same day, next day, whatever. And so I'm trying to figure out if that's because there's a lack of employees, or is it because they're just so big, so much demand, right? Or is it both? I don't know if you've thought about this or talked to somebody about this, but it's kind of like the elevator talk, right? You get on an elevator, and if you hear somebody say, man, I got to get into oil, and you look at them, they've never been into oil, that tells you to get the hell out of oil, all right? Because when you start hearing everybody talk about it, that's when you need to be exiting, so to speak, right? And so I'm kind of curious with this right here, like, is the economy really that strong? There's so much demand, or is it because they're still having problems filling the positions? And so, I'm going to start asking around at certain companies when I walk in, and I'm just curious. Same with restaurants. It's really hard to get into some of them now. The waiting lines are so big. I'm like, is demand just got that much more, or are we still having problems filling the employment? So anyway, just want to put that out there to you. Let me know what you think down in the comments. As always like your feedback, and I appreciate it. So I hope you guys have a good one, and I will see you tomorrow.